Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another daily trading inspire recap. Real quick, I want to say thank you all for all the likes, the comments, the subscribes, all the views you guys give me. All of it means a lot. All the comments mean a lot. The subscribes, we're growing. We're up to 54 subscribers. Let's continue adding up. Let's try to get to 60 subscribers. And thank you guys for everything y'all do for me. It means a lot, okay? And real quick, I want to say I hope all of y'all having a wonderful day because I know I am. We're 2-0 on the day. We would have went Michael Jordan 3-peat, but I couldn't pull the trigger on this third trade setup. But I'm going to show y'all real quick the news that we had come out that gave us this pump from 582 all the way up to 587. And then I'm going to show y'all why we didn't actually get in on that move, why we ended up taking a trade on the reversal, and let's get straight into it, okay? So real quick, remember yesterday I told y'all that coming into the day today, we were going to have a lot of big news that was going to move the market. We have core inflation rate month on month, core inflation rate year after year, and CPI. So that is consumer price inflation, consumer price index, but that's basically I'm pretty sure that's like how much we're spending as consumers. And so that actually came in better than expected. The actual is 320, forecasted 321. So that's showing inflation's going down. So I mean that's pretty good that consumers we're spending a little bit less because now our inflation is from, see, the inflation forecast was 2.5%. It is at 2.3%. That is good. Why? Because that is getting closer to our 2% goal, so the Fed can cut rates, right? Because we know the Fed doesn't want to cut rates till it gets closer to that 2%, and it's getting closer and closer, okay? So, real quick, why didn't we get it capitalized off this up move? Well, as we see, when the market opened at this 582, there was no way to get in. I mean, you could say right here, this little move down right here, this little fill of this gap, but how do we know that's going to continue up? We're right near a resistance area. And I'm not going to say how do we not know it was going to continue up, because we don't never know exactly what price is going to do, right? We kind of just go off of our strategy, right? But look, we didn't have this filled really. We had this little doji into it. I guess, yeah, you could have taken off of that, but I didn't capitalize off this up move, okay? Maybe if this doji, when it broke this area of resistance, that's when I was waiting on an actual pullback to use this resistance as support, filling this fair value gap. Let's go to our 5-minute to show you what I'm talking about. So you see how we have this fair value gap right here. We have this fair value gap right here, right on top of this resistance. So I wanted us to pull back into it, use this resistance as support, use this fair value gap, and then continue pumping up. But we didn't. We just kept flying through the water, okay? And I was like, okay, if that's what you want to do, I'm going to wait for my reversal because I know eventually they're going to give us a pullback, right? So what did we get? We pumped up so far, then boom, 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 boom. We got these seller candles. And I was like, that is what I like to see. So when we got these seller candles, it pulled back into this fair value gap right here because this is a fair value gap. But I was like, that's not a deep enough pullback for more power up, okay? So what did we do? When we got that, we ended up pumping up and using this little gap and wicking down. And I was like, so what was I looking for right here? I was looking for a mitigation block. What is a mitigation block? A mitigation block is a sign of reversal. So we have a low, a high, and then a low, a high, another low, and then a lower high for reversing, and then you pull into a fair value gap and you downtrend, okay? So that's what I was looking for. What did we get? We got this up. Whenever we pulled back down, use this little gap right here to break it down. I was like, if it just falls over and breaks down, I'm not worried about it. I'm not going to take that trade because to me, that is not a formation that I like to see. I want to see a formation. Remember, we don't just hop in on red candles or green candles. We need a formation. We need our strategy set up, okay? And look, this is actually giving us a good setup right here. As we're currently speaking, look at this setup. And I'm gonna get into this setup. I could have profited heavy, or about $100 I left on the table. A 3-peat, I would have missed out on the table. And if you look, what is it doing? Pulled into what? This fair value gap. and it's starting to fall over. We're going to see if it wants to break structure and then end up taking out this retracement. But we'll get into that, okay? I'm going to be mad if it does all that because that's a big move we could take. But let's get into it, okay? So whenever we came up, it looked like we were just going to roll over. And I was like, okay, if it wants to do that, it does that. You know what I'm saying? I'm not going to be mad at it. I'm not going to hop in the trade. I'm not going to force the trade. I'm going to wait for my strategy. What did we end up doing? We ended up coming back up, using this, top, and you could say whatever, using this area, breaking back down. What did we do? We swept this low, and I was like, oh yeah, swept this low. So it's looking like it's tapping this fair value gap and then gonna shoot back up, right? Because that's what price does, right? It has a high, and then it wants to tap a fair value gap and continue upwards. I don't know why I just stopped my thing. And then it wants to continue upwards, right? Let me delete these drawings real quick. So it looked like it wanted to use this fair value gap, but I was like, yes, maybe, but I feel price wants to come back down to this resistance using it as support because we also have this little retracement right here. We know price likes to sweep retracements, right? So when we swept this area, I was like, we're in the money. Give me a pullback to this gap right here, and we're in for a short. And what did we get? Boom. This was so textbook right here. Mitigation block, mitigation formation, swept this area of liquidity, faked out these buyers thinking they were going to use this fair value gap. But really, we're going to end up probably breaking all the way down to use this resistance as support because we never used this as support. We just flew through it. We haven't used this as support yet. And that's where we can end up falling over and sweeping all of this. Because as we see, this is trend line liquidity. Look at that trend line liquidity. Yep, all trend line liquidity right here. Break it through, and we can sweep it all the way down and break these lows. I'm calling that, okay? I'm calling that right now. I'm calling that for you, my good people. So, but that's what happened. We had that mitigation formation, swept these buyers out, swept these buyers out at this area, making it look like they were going to use this fair value gap to pump upward, but we just used this fair value gap to give us a little power, fill this mitigation block gap, and then breaking over, boom, 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 and that was our first winning trade of the day. But we wanted to target these lows, but we didn't take out those lows yet, so it was like that. This was my risk to reward. I got in right around here, so my risk to reward was 2-to-1. But we didn't get that full move, and so we only profited $54, okay? $54, but remember, we're trading small position size. It was 3 contracts, but we only profited off of about, if we get from right here, that's 587, 15-ish. We hopped out. We didn't get this full move, so that's where I'll pull it up because we hopped out a little early right around this block right here. And so we only profited right around, let me see. Oh man, I'm getting a little lost over here. Okay, right here. Okay, 15 down to, I think we got out a little earlier than that. I think we got out right around here. So yeah, we only profited about 75 cents. So remember, it's about price action. Because we need the number of price actions, the dollar drops, so we can get a higher winner. But we're chasing consistency, okay? So we don't want to risk, you know what I'm saying? Like we could, because we're in a heavy uptrend, you know what I'm saying? We have really good news, we have really good CPI. So me trading the reversal, it was a little risky. So I did want this retracement, and I do feel like it's going to come use this as support and sweep out this retracement. But as we see, it only broke down so far, and it still just used this retracement as support and held up and actually got a little bit above these highs. So I didn't hold the move fully. I could have profited even more than $50. I could have had about $100 if I would have had this full move. But if it would have actually, tanked and like went my whole area, that would have been a 2 to 5 to 1. Okay, so right there, that was a quick $50. Okay. So $54. And then what did we want? When we broke down, I was like, okay, well, it's going to give a pullback because we have this fair value gap, right? We gave a change of character. We broke structure. or yeah, we gave this mitigation block, mitigation formation, swept this area, came up, boom, broke structure to the downside, and then we pulled back to this fair value gap. I got in right around here, and I was still looking at the same thing. I had my stop loss at the top of there. I got in right around the bottom of this wick, and I still wanted to take out these lows. So that would have been a 1.8 to 1. So right after I hopped out, right around this 586 area, up 55 bucks, I waited for this pullback, got this pullback, and I hopped right back in for another short because I wanted these this retracement to get taken out. But we didn't. So this is where we got, I'm not going to say lucky, but we got out perfect timing. So when we started breaking down, we came up and we wicked down, but then the next one, we wicked down and we started coming back up, wicking. I was like, nope. I called the trade up, I believe, 17 bucks. So not much, and that was another 3 contracts, right? But that's not much. Obviously, you see that's not much price action whatsoever. It's about probably 20 cents, 30 cents. But we were still on the right side, okay? Still on the right side. This one was, the first trade was a straight banger. You know, I was so happy on that trade. That was a straight banger. Mitigation. Swept these area of buyers out right here. Because remember, we have buyers right here at this area that are pushing price up. We came down, swept these buyers, having buyers step in right here at this fair value gap. But we need a stronger area of support, right? So we used these buyers, picked up, just created this mitigation formation, pulled back into this fair value gap, broke down, broke structure, and that was quick profits, okay? We could have had more, you know, a bigger contract size, and if we had a bigger move, because remember, this is from this part, 587 all the way down, 586. So that's a whole dollar move, and obviously we only capitalized about $75, 75 cents of that move, okay? And so quick 55, quick 17, and so real quick, I'm gonna show you the trade I was gonna take pretty much right before I hopped on here, but I just couldn't pull the trigger. I didn't want to risk, and not wanting to risk, you don't get no reward. No risk, no reward, okay? And so what did we do? This is pretty much textbook right here. So in my 5 minute, what did we have in my 5 minute? All we did was sweep this area. This is all sweeps. Just swept these sellers out on this area. And I was like, okay, we swept them out. I cut on my 1 minute. On my 1 minute break of structure right here, how we broke structure and we continued to the upside, what do? We flushed down, giving a change of character right here, giving this change of character, pulled back into a fair value gap, which was the fair value gap I was looking at, but I still just couldn't pull the trigger. Pulled into this fair value gap, and what did? We rolled over. Boom, 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 boom. And I was looking at the options. That would have been the option I was looking for. 3 of them was 236 bucks, and then the options came even further down to about 320 bucks. I wouldn't have capitalized off that full thing, but I would have made about 70 bucks. So that would have been, so up on the day, I'm up 72 bucks, but I would have been up about 140, 150 bucks on the day. But shoulda, coulda, woulda, you know what I'm saying? Not worried about it. But remember, okay, those were only dollar moves. That is why that price is so little. But you're not going to always be able to capitalize off these moves. Of course, I would have wanted to get in at this $5 move up, but there was no entry for me. You know, of course, this one right here could have been a little entry, but I didn't get in at there. You know what I'm saying? I didn't get in. That was, what, 9 minutes when the market opens. Usually you want to, well, usually for me, I want to wait a little bit, about 30 minutes, you know, because there's a lot of fake outs and stuff right when the market opens. But, you know, I should have just took this trade because this is pretty much textbook, you know, had a high, broke down low. But why didn't I? Another reason I didn't, because of this, and I actually forgot about it. This is actually one of the reasons I didn't take that trade, because I wanted us to break down and fill this gap, fill this very value gap, and use the top of this as support. Because as we see, this is resistance. So that's another reason. I just wasn't thinking about it right now. But yeah, that was actually the reason why I didn't, because whenever we opened, I wanted us to actually fill these gaps and maybe come into and fill this one. But this is the one I was really looking at. And yeah, I mean, we touched it a little bit, but it didn't look good for me. I wanted a stronger wick down, you know what I'm saying, and then a reversal. I mean, technically, it really did do it, but didn't capitalize off that one. But that's actually what I was looking for going into the day. I wanted to see us fill these gaps, use the top of this like range as support. And I mean, it could fill this area right here, but you know, and then it just took out without us. But whenever it took off without us, we didn't get no pullback to this resistance, using this resistance as support. And so I was like, okay, well, I can't get in. I don't have no entry. You know what I'm saying? Because it just kept flying up. You know, it used this right here, but it's still a lot of liquidity, not using no support. It's just flying through the roof. And that is why I was looking for my mitigation formation, because I knew we were going to get some type of reversal for a pullback. So that's all I did, was traded the pullback on the up move. And it was straight textbook mitigation formation. And I was really proud of that first trade. This second trade could have played out pretty good, but that would have been like too easy for the market makers. You know what I'm saying? The market makers don't like to give you money that easy, where it just break down, easy fair value gap, and then just break down instantly, right? That's kind of too easy. They want to give you these mitigation formations, all type of play around, and then pull into the fair value gap. You see what I'm saying? How this looks very choppy and looks like a lot of play around. You got to be able to see through it and see what they're doing, okay? And so that is pretty good. You know what I'm saying? 2-0 in the day, up $72. Yesterday was up $78. Let me check real quick for you guys. So we're doing good this week. This week we're 3-0 on the trades. So today we're up $72. Yesterday we were up $76. So now we're up $148 on the week, and we have a little cushion going into tomorrow, and we are ready for tomorrow. Okay, real quick, let's see tomorrow what info we have coming out. So tomorrow we don't have much news. Yeah, tomorrow we're pretty good. You know, gasoline production change, EIA distillate. I mean, I don't know what that all that is, but a lot of, you know, not too much important. Mortgage market index and stuff like that, 30-year mortgage rates. So, you know, the mortgage rates could probably move the market a little bit, but they're not going to be it's not going to be that big. But Thursday, I believe we have, Thursday is going to be whenever we're going to have a lot of volatility like we had today. Since today we had that CPI, good CPI, we had a pump to the freaking moon. $5 up on SPY, on QQQs. QQQs, we pumped up, 508 all the way up to 516, so $8 move. And Jesus Christ. Alright, let me go to my 5-minute. Oh man, sorry about that one, beautiful people. Alright, whatever, you want to stay in the 15-minute, we can stay in the 15-minute. Oh my goodness. Now this thing playing with me. It was about 840. I'm gonna have to go back and look at where it's at. I know it's at 584 or something. I'll just delete it for right now. You know what? Jesus Christ, delete all the drawings. Okay, I'll mark those levels out again, you know. Not too important. After we already had our trade, and after the, you know, pretty much the day, the levels aren't too important for right now. I'm gonna mark them out in a little bit. But yeah, so like today, how we had this pump from 577. Jesus Christ. No, not 577. Sorry about that, my beautiful people. Okay, sorry about that, my beautiful people. Oh my goodness, I can't pick the right time frame to save my life right now. I really need a mouse for this laptop. No, I ain't gonna lie to you. Okay, so after we had this pump from 582 up to 587, the $5 move, that's a pretty big move. With this whole, I can't believe we're missing this 5. I can't believe the market didn't let us get this move. $17 move. The market's cheating us for that. But Thursday is when we can have another big pump, something like that, with the PPIs coming out, because that is producer price inflation. So that producer prices, that is going to show the producer prices, inflation. So if that comes out good, that's going to be really good news for the market, also for the Fed, so he can cut rates. So that is why we're getting these pumps. And so that's going to be very big. We have jobless claims, 4-week average, Philly Fed employment, core PPI year after year, retail sales month on month. So Thursday is going to be another very volatile day where we could potentially have. So I have more. Okay, so I have to mark them out again because I just deleted all the drawings. So let me show you another area of resistance where I believe we can pump to. The middle of this big bearish candle is where I have a resistance at, and then I have a resistance at the top of these candles, at the top of this candle. Boom. At the top of this candle. And then my support, let me mark that back out, was at this 584. Why? Because as we see right here, we had wicks, and this was under this area of support. So as you can see, we have a support right here. Let me show y'all. Yeah, that's actually a support right there. I think I had my support previously a little lower. I think at 584. But as we can see, that is an area of support. Why? Because resistance, support, support, support. And we use it as support, and then we knock through, and we use it as resistance. And remember, this 575 was a big area of resistance. And now it can be an area of support for right now. But remember, I do see us giving a drop, so I wouldn't be investing all in right now. If you didn't buy the dips, I wouldn't be going all in investing right now, okay? Because we will have a more of an opportunity whenever this market gives us the pullbacks. Remember, I can see us pulling back to this 200 moving day average or filling these gaps, which I can actually see. Remember, I've went over this multiple times. We have these gaps down here that I could see us fill, creating another higher low before giving us that run up in the final third quarter, okay? So real quick, that 590 area, we could pump through and maybe try to reach this 597 if we have good PPI and yeah, good PPI and just more good data. Because right now we're getting some good data. I mean, good news on the tears. We have good CPI, inflation's coming down. If we have good PPI showing inflation's coming down, that means Fed can cut rates. So all of that together is coming in really good, giving us these really nice pumps, okay? But tomorrow, what do we have on the data? Tomorrow we don't have much on data. And so tomorrow can be a pretty chill day. Maybe we can have a pullback. That's what we'll be looking for. Maybe a little pullback into this gap that we didn't get today. Using this, okay, that's exactly what we're looking for tomorrow. Because we didn't get that pullback using this area of support. So I'm going to mark this right now. Okay, I'm just trying to get a nice number, man. Oh, right there. That is perfect. See that? So we can get this pullback. Did we actually already touch it? I gotta see real quick. No, we didn't really touch. We didn't touch that fair value gap. So, yep. Tomorrow, we could have a cool off. Could have a cool off to this top of this range, using the top of this range as support and touching that fair value gap that we were waiting on today. So today when the market opened, just like I told you, I was waiting on that pump on top of this on top of this range, using this range as support. We didn't get that today because we had really good data and a bunch of excitement, so we just had to pump through the roof. But tomorrow, where we have cool down, not much data, that's when we can have the cool off and get this pullback into this gap. And then Thursday, that will be setting us up for Thursday's really good PPI data and to give us a more pump to reach this 590. So that's what I can see coming. And if I'm right, just know I told you so, okay? Just know I told you so. But we're going to be ready for the markets tomorrow. Green yesterday, green today, and we're feeling good, okay? So that's it. I don't want to make the video too long for you guys. I just wanted to break down my 2 winning trades on the day. How yesterday I navigated that choppy market that we had yesterday, and then today how I navigated, even though not being able to capitalize on this pump, how I was able to capitalize on the pullback of this pump with it being choppy and pulling back, but I seen the mitigation formation and capitalized off that pullback, okay? But ultimately, we do want to capitalize off these $5 moves because that's how we make hundreds and thousands of dollars with the $5 price action moves. These $1 price action moves, they aren't going to give you much, right? Because it's only $1 price action, 75% of price action. That's not going to give you much. But we will capitalize off these $5 moves. We just need a good entry. We just need a good entry. We haven't been getting a good entry on these big moves, and so we got to capitalize off of what we can get, okay? But these big moves are going to come. Remember, we're chasing consistency because consistency is going to build profits, okay? So remember, I love every single one of y'all with me. Make sure to study so you guys know what y'all looking at. Make sure to learn from what I'm showing you guys. Learn from my winners, learn from my losers, and so you don't run into the same things, and you can see what I'm talking about whenever you're trading yourself, okay? I love every single one of y'all with me. And remember, guys, stay persistent, passionate, and make sure y'all get paid, all right? Peace.